Most real estate agents overpay on their taxes, and not because they're making mistakes, but because they're missing these simple deductions. In this video, I'm going to go over 5 of those deductions that are commonly missed by real estate agents so that you can keep more of your commissions. Now, the first one I'm going to talk about is your vehicle expenses. Most people know this, but a lot of times this doesn't get handled correctly. Now, you have 2 options to use when claiming vehicle deductions. You can use the mileage rate, standard mileage rate, or you can use the actual expense method. Now, the standard mileage rate is simply that. You take the number of business miles you have on your vehicle, and you multiply that by the current mileage rate. For 2025, it's 67 cents. So for every 10,000 miles you drive for business, you get a $6,700 deduction, and that you can take every year. Now, for most real estate agents, this is probably the preferred way, not only because it's simpler, but it usually gets you a better deduction over the life of a car because you drive so many miles on your vehicle. But a lot of times I think real estate agents underreport their miles actually because they're not really tracking it. So they don't know how much it is. And then when they estimate how many miles they drive, they're coming in, I think, usually on a lower end. Now, the other option you have is the actual expense method. That's where you're taking the actual expense, the biggest, of course, being the cost of the car that you're going to get through depreciation. But a lot of time agents miss then the other expenses that you have that you can claim using the actual expense method. That includes your gas, your insurance, any maintenance. All those other things are actual expenses that you can use in addition to the cost of the car to get you a better write-off deduction. So I'm going to go more in detail in a future video. So if you want to see that when it comes out in a couple weeks, go ahead and subscribe to the channel, and that way you get notified once that video does come out. Now, the second one I'm going to talk about, I'm also going to dive down in depth in a future video. So you want to subscribe if you want these future videos where I get more in depth. But the second one I'm going to talk about is your home office deduction. So the home office deduction is something that every real estate agent should be taking because every real estate agent works at their home, and so you should have a home office. Now, the one requirement you have to meet for this is that home office needs to be an actual space that is exclusively dedicated to that office space, meaning your kitchen table is also functions as a kitchen. Whether you actually cook and eat in it, different discussion, but it has dual purposes, so it can't be used as your home office. Same with a spare bedroom that's got a bed and some furniture in it, along with your desk. Well, that whole room cannot be your actual office because it has a dual purpose there. It has to be 100% exclusive. But if you meet that 100% exclusive requirement, now you can take some of the expenses of the home as a deduction on your tax return. And those expenses include things like rent, if you're actually renting the place, or your mortgage payments, if you're owning it. Now, the mortgage payments is not the principal part, but it is the interest, the insurance, the taxes, all those other parts of your mortgage payment are portion of that will be deducted. Also, the utilities and other monthly costs like that, part of that can be deducted. But if you want a deeper dive, like I said, I've got a video where I'll get more in depth on that in the future. But it's something, even if you have an office at a broker site, wherever that might be, you can also have that home office space, so you should be taking advantage of that. All right, number 3 that I'm going to go over, sorry, I'm looking at notes here, is marketing and advertising. It seems kind of common sense that these are business deductions, but these get missed a lot. And I'll talk about what I'm talking about here is really business cards, yard signs, staging photos or listing photos, I should say, or staging furniture costs, rental, whatever that might be. All those costs, whether you're advertising a specific listing or home for sale, or you're advertising for yourself through things like online or even print ads or anything like that, those advertising, they are all business deductible to your business, whether it's your business, you as a real estate agent, or that single property. Sorry, I lost my notes here. But the reason a lot of those get missed, I think, is just people don't have a good system to track their expenses. And so those are things that get lost when they're trying to go back and find all their expenses for the year. I think that's all I want to say on that one. So number 4 is going to be professional fees and education. I kind of lump those together. But those also seem pretty obvious, but they get missed for a variety of reasons as well, not just not having a good system to identify those. But the professional fees, what I'm talking about here, are going to be your MLS fees, license renewals, broker fees, things like that. When I talk about continuing education, things that you might need to take to meet requirements for your state license, or they could be courses or classes or even a book that you're reading that is going to benefit you in your business, either on the back end of the business side of things or on the front end, the realtor, sales, lead gen, that kind of thing. So it doesn't matter. Those books could be a physical hard copy book, could even be an audio book that you're listening to around town, as long as it's a business book and you're reading that for the purpose of enhancing your business in one way or the other, that is deductible. Now, if you get a fiction book, audio book, and you're listening to that, driving around to different listings, that would not be deductible. But if it's a business book, that of course would be deductible there. So they get missed a lot. Especially the dues and things like that get missed a lot because maybe you have it on autopilot. You have it automatically draw out and kind of forget about it when it comes time to collecting expenses for taxes. Or maybe things like your broker dues or broker fees. Maybe they're taking some fees and some expenses out of your actual commissions before they give you that money. So you don't actually make that payment. It's just getting automatically deducted. Well, that is an expense to you because that gross amount is going to be reported on that 1099, even though you're getting less than that in actual deposits. So if you add up your deposits and there's a difference there, that's probably because you've paid some expenses that they've taken out and deducted from those commissions, and you need to claim those on your tax return for your taxes to be accurate, and you don't overpay on those taxes. All right, so it's been helpful so far. I appreciate that thumbs up. It really does help, but this next one I'm going to talk about is the big one. It's the most common one, I think, that is out there that gets overlooked by agents, and that's your health insurance premiums. So your health insurance premiums can be a deduction when you're employed by yourself, whether you're filing as a self-employed, sole proprietor, or you're filing as an S corporation, doesn't matter. You can still claim these health insurance deductions, and not only for yourself, but also your spouse and any dependents you might have as well could be deductible. Now, you can't be covered by an employer plan to take this deduction. So if you or your spouse has a W-2 salaried wage and they're covered and you're covered with their plan, then that might limit or exclude you from this deduction, but it's something you need to be aware of that could potentially be a deduction, because if you can take it, we all know health insurance premiums are very expensive, so this can be a very big deduction that you're missing out on. So you want to make sure you're claiming that one. So missing that one or any of these can really cause you to just overpay on taxes, and that's the biggest reason people overpay on taxes, is simply not getting those deductions for things they are in fact entitled to. So make sure you're claiming all these deductions, and make sure you're claiming them fully and completely to get the most out of your expenses. Now, if you want a list of these emailed to you along with any notes for all these future videos I'm coming out with, there's a link below in the description that you can sign up for my newsletter. And that newsletter is simply just the notes of all these videos, a bulleted outline of exactly what these expenses expenses are. Nothing too big, but it's something you get so you can have these in your inbox, and you don't have to take notes, don't have to remember what exactly I'm saying in these videos. You get it in your inbox each and every week with these videos. Also, if you want to talk about these expenses and deductions as they relate specifically to your business, or maybe you have questions of how to actually implement them, there's also a link below where you can book a time on my calendar and we can discuss all these deductions as they relate to your business. All right, hope this was helpful. Subscribe to get those future videos, and thank you for watching.